Welcome back to the Global Business Report here on Arise News. The story of the Nigerian Stock Exchange has been of some bits of volatility here. This was last week, just the 17th through to the 25th. I know it's only 1 week. The story goes further than that. But you have your all-share index, 145,159 points. Year-to-date return 41.03 as of Monday. Now you can see the slide here. I think we lost about 2 trillion, going down to 143.722 as far as the all-share index points are concerned, 39.6% year-to-date return. So we've had a bit of volatility this year. At one point, the market was up 50% year-to-date in October. We had about 4.6 trillion wiped out November the 11th in a massive, massive slide. And then, of course, as we just mentioned, the 5 days of losses that we've seen so far this year now as of Friday. Trading, of course, will begin 39.64%. So we're happy to have a conversation with Mr. Muktar Mohammed, who is the CEO of Finance with Muktar. Muktar, it's good to see you.
Always a pleasure, being. Thank you.
Welcome. Please have a seat. Let's begin this conversation on stocks. You are our resident experts when it comes to the market. So, look, I think we should start off with the rally that we saw, up to 50% yet. Let's start with the good news first. We hit 50%. What was behind the rally? We had you a couple times.
Yeah, Rotos, I always said what was behind the rally has always been the fundamental. Then you also saw the rush for capital by the banks also to the market. You saw inflation came down. You saw the recovery in terms of FX losses from those big cap companies, the like of MTN, Nestle, Unilever, all those, especially the consumer goods sector that were mostly punished last year due to that FX revaluation. So you saw that recovery because of the exchange rates coming down, and saw those recovery in most of those high cap stocks. And so that basically was the two main important reasons. And you saw this foreign investor come into the market gradually in trickles. So that also was responsible for the kind of rally. But don't also forget that the fundamentals were still very, very strong. Okay. And the economic also fundamentals improved slightly. Yeah. And all this added to what we saw.
Okay, good. So thank you. You've given us a background, the good news. Now we get to what we're seeing here. This was just last week, right? Can you talk, and then even prior to that, the 4.6 trillion that was, what happened?
Well, it's what we keep saying, that the market is driven by policy. You cannot separate the market from the economy. And utterances sometimes has a very significant impact on the mind of investors. Yeah. So what happened there was 3 things were responsible for the kind of losses that we saw in the market. One was major, and one is normal. Now, let me start with the normal. Rotus, if you are a student of the history of the stock market, you know that between October, November, towards half December, you see those bearish slowdown in terms of movement. You see the market have this good entry point, good exit point, good entry point, good exit point. Investors try to reshuffle their portfolio based on the third quarter result, either price in, then begin to price in the dividend yield and others. That was what normally happened. And we saw that was normal. Secondly, we saw that threat from the American president saying, we will intervene in Nigeria. We will come. In short, the man was like, we will attack. And the market responded. Now, the market responded not to the direct policy statement from the American president, but from the response of our authorities. The response was like, we are a sovereign nation. And look, the truth to be said, we cannot stand with the American face. So investors were scared because the response was not good. I expected the response to be what it is today, whereby you say we are engaging them, we are going there. You would have seen the kind of that. So investors were apprehensive, especially foreign investors. Now came the big elephant that really drove the market down, the capital gains tax. There was no clarity. Yeah. After that wipe up, you saw the minister came that day to The minister came that day to say, we heard you. We heard you. You saw the market respond. Yeah. Then the tax, the presidential tax committee coordinator came in and said, look, pension fund, institutional investors, it will not be retrospective tax gain. Yeah. It will start in January. So that brought a little bit of calmness to the market.
Yeah.
But that calmness can only be substantiated, or that calmness can only be sustained by clear-cut utterances with actions. So what we see now is utterances. What we see now is engagement. This is what was supposed to be. Engage the stakeholders before you even bring it to public notice. So that's definitely what happens to the market, where you saw the rally and then you saw the kind of losses.
See, Muktar, this is why we have you on the show. Fantastic. You've laid it out. You've explained the rally. You've explained the pullback. I want to ask you about buying the dip. I know you've heard this. I'm not even sure, maybe you've used this phrase before. But if you bought into the market, and I'm going to later ask you about if anyone should be buying into the market this time. But if you did, if someone bought in on Monday and then started seeing the slide, what is your take on buying the dip? I know you don't have a crystal ball. It's hard to tell these things. But buying into a bearish market or a falling market, how?
You know, Rutos, there's a saying that goes on in the market. They said you make money in both the bearish market and the bullish market.
Yeah.
But you also beware that you don't become the pig, because the pig will get slaughtered.
Yeah.
And then the Hannah goes on to say that you don't grab a falling knife,
yeah.
and you don't jump into a running train.
Right.
So you need to look at all these variables to make up your mind. Now, when you buy into the dips, are you buying into the dip as a speculator? Are you buying into the dip as an investor, or are you buying into the dip as a long-time investor?
Right.
Now, when the market dip, it creates opportunities. But that opportunity can only be driven by value investing and strong fundamentals. So when you look at the current dip and you look at the stocks that were involved in this dip, let me give you an example.
Yeah.
At the dip, the 4-point-something trillion,
Yeah.
we saw UBA move from 43 Naira to 34 Naira.
Ouch. Banking stocks were hit hard. Yeah.
Hard.
Yeah.
But when that policy statement came in, we saw UBA move from 34 Naira within 2 days back to 43 Naira. If you're a value investor, you bought into the dip based on fundamentals, you make almost 20%. And then the dip is back again.
Yeah, yeah. Okay. Now, we're expecting the MPC decision tomorrow. I don't know if you want to give us a prediction as to what you think will happen. Do you think whatever the decision is, the market would react? What do you expect tomorrow?
But Rotos, ordinarily, a cut rate is fantastic for the market.
Right.
Ordinarily.
Yeah.
But you've seen that has not really impacted the market so much. Maybe you say the capital gain tax, maybe you say the utterances, maybe you say the bearish season, fine. But again, you have to look at ordinarily the fixed income space, the return on the fixed income pay is low.
Yeah, yeah.
Now, presently it's low. So that should attract more investors into the market. But now look at it this way. Who are those utilizing the fixed income space? The government.
Right.
Then looking at the budget, you know the government will still do a lot of borrowing. And if the government want to borrow through the capital market, that means the return will still be high. So definitely what you are seeing now, investors are pricing most of the borrowing and also looking at the equity market, also have priced it in.
Yeah.
So whatever policy they do now, investors are already pricing that policy. So you might not see the kind of policy shift, whether a cut of rate or a hike of rate, the impact it will have in the stock market. Ordinarily, it should have a huge impact.
Yeah.
But what you will see now, that cut will now make the fixed income investors begin to look at the dividend yield as per the stock market and the fixed income space. Depending on what side of investor you are, you make your take.
Perfect. Now, just speaking generally, does the stock market tend to react? I know you've mentioned Trump and the capital gains tax and so on and so forth, but I guess, does it tend to react to MPC macro events? Does it? What's your read on how the market?
Well, I think the challenge with Nigeria policy, economic policy, sometimes MPC doesn't, the microeconomic, the MPC doesn't tend to combine that singular statement as regard the economy.
Yeah.
So what you see when you get the MPC or you get these economic issues, you see that the market takes a life of its own.
Right.
Depending on what decisions, a cut rate Does it favor the financial sector? Does it favor the consumer goods sector? You see that sector react to that rate.
Yeah.
Then you now see that at a point, that sector will need the micro policy to continue that drive. That convergence, that synergy is always not there. So you don't tend to see those impacts like you see. You say inflation is down. To the common Nigeria, inflation is not down. Inflation is still high. Cost of goods are still high. And when they ask you that question, you say, inflation is down. Can we see that rate cut? Can we see that rate hike? You look at it, you say, if you look year to year, inflation is fantastic.
Right.
But that was before rebasing.
Right.
So inflation now is rebase inflation. Do you want to price based on rebase inflation or what I call the real inflation? That is where investors are sitting at the moment. So sometimes you could not see that because reality and policies are not converging.
Fantastic. You mentioned foreign investors, and there was this the data points that the NGX released. The domestic and foreign portfolio report. So as of October, 2 trillion in value from foreign investors. You've always talked a lot about foreign investors, domestic investors. What was your take on this figure?
I think that figure favored the CBN.
Yeah.
Because when you saw that was why we were able to substantiate the exchange rate. You saw the exchange rates coming down. Because we saw a large inflow of FX into the Nigerian capital market.
Right.
That was why you didn't see the kind of bleeding you would have seen the Naira bleed. When you look at the budget benchmark at $75, the current oil at $65,
right.
$10 difference. But you saw that because the foreign investors were coming in. So what happened is that you saw those inflow, but now looking at those inflow critically, if the stock exchange is going to give you a breakdown, you realize majority of them went into the fixed income space, which is a better return than the volatility you see in the stock market. So that was what really happened. Now, do I really get excited when you see foreign investors? Rotos have always told me, I don't get excited because when the alarm bells ring, they are the first to want to jackpot. So it's better when you have these retail investors owning the market. And that's why I've been excited about the market ownership from the retail investors. But now we see those panic in the retail investors. We see that most of these retail investors are not institutional retail investors. Imagine if you have institutional retail investors like the pension fund administrator, then you begin to see that the market can substantiate whatever bullish runs he will say. You see those drop you saw. It's driven also based on what I said. And then most of those people there were retail investors. And they are now looking at, I have made profit. Should I not exit? I have December festivity at hand.
December
is at hand. And I have January for school fees.
Exactly.
So,
and rent.
Exactly. So you are beginning to say, look, let me just take whatever. No, Rotos, I said it the last time I was on your program. I said, even if the NGS close today, even if the NGS end the year at 39%, whether by rebasing inflation or real inflation, you made money.
Exactly, which is true. Okay, look, it's still 40% for the year. Okay, tough question here. You don't have a crystal ball. What kind of activity do you expect this week? Considering, do we get a rebound since we dropped so far? I mean, how do you see? Maybe I should extend this into the end of the year. But how do you see trading happening this week?
I looked at the market before I came in. It's not looking like you see those rebound on the Monday. But no one thing. The Monday is always a day of sit down and look for real investors, looking at price movement. I think we'll get those ups and downs within the week. Some particular stocks will get some little bit of recovery. We saw that in Zenith Bank when it went to 58. We saw it close at 59 something. We saw that in UBO. Also moving to 36, and we saw it come to 37. We saw that also in GTCO. So you see a little bit of those companies taking what they think the market should price them to be. But on the long run, like I've said, this is a season of the bearish and the bull trying to take possession of the market. And it's always work for the bear for the bear at this season. So definitely it will still be those ups and downs. But towards the middle of the year, like I said, you begin to see the real market position. At that time, institutional investors are beginning to take position as regard their portfolio. Retail investors are beginning to look at the dividend yield. So you see the market recover. But for now, it will be up and down. But like you said, that creates a big opportunity for designing investors to take.
Okay, so please, final question. Put on your personal finance hat. Well, and I know you run a lot of courses. You talk to people. You give advice. What is your advice to a newcomer to this market? A newcomer who may choose this week or maybe choose January. What's your advice to newcomers that are coming to the NGX, to stocks?
Rotos, you know those quotes I quote. As I always say, it's from Warren Buffett. He said the market takes money from the patient. I mean, the market takes money from the impatient and gives to the patients.
Yeah.
So my advice, value investment, fundamentals, and the key attribute, character of a good investor.
Yeah.
Patient, especially when you buy into the deep, true value and fundamentals.
All right. Muktar Mohammed, CEO, Finance with Muktar. Fantastic conversation to kick off this new week. We'll see how the markets perform. Thank you so much for your time.
My pleasure, always, Rotos.
All right, that's it for the Global Business Report. We'll see what happens tomorrow with the decision for... Oh, wait, Muktar, you didn't give a prediction. For what do you think? I think they'll cut, or someone's saying they'll hold. What do you think?
Conservatively, you look at the history of the exchange.
Yeah.
If you look whether it's Emefiele, whether it's Soludo, whether it's Cardoso, they don't just cut after cut. Right. They don't just hike after hike.
So you think a hold?
A hold.
All right, we'll see how things work out there. That's it for the Global Business Report. Muktar Mohammed, thank you so much. Appreciate it.